12/14/2012. Friday options expiration. One of the things that we want to bring to people's attention is how all of this hyped up stuff happened with this Best Buy. And that Schultz is going to try to make a run with a group of investors to buy the company. Now, based on that news the other day, they did the super gap up with the super gap down. And so right now, it's right at about a 10-year low in the mid $11 range. That's 10 years, going back 10 years since this name. And there's a lot of controversy around this person, Mr. Schultz, buying back his company that he originally started. So we're going to be taking a look. The lower that this price goes, the better it is for them to make that acquisition or take the company private. And that's the super gap here on Best Buy. And then people were buying lots of call contracts in this Best Buy, BBY. And I'll just show you some of the open interest in here, everyone. I will show you on the call side just how exuberant they were getting. They bought 20,000 contracts here of the $14 calls that expire today. And that this is all Friday, today's expiration. Look at here, 29,000 contracts at the $15 hit. And these people, look at here, 25,000 open interest here at the $18 one. They're all go worthless today. 24,000 contracts here at the 20. I mean, my goodness. Look at here. $22 calls up and out of the money at 24,000 open contracts. They're all going to go worthless. This side of the market's going to go worthless today. Now, having said that, let's look out further and take a look and see where they're buying again. Right here, same pattern, $19 calls at 23,000 contracts open interest, 20,000 contracts open interest up to 23. So for the following week, they're really thinking there's going to be a deal. Well, listen, buying the $14 puts is the one that paid. Okay? So let's take a look out to January of 2013. That's what this is. So you can see the open interest MMTs. I got 20,000 here, 23,000 there. Now, what happens with these things, look at, there's a lot of controversy around this name. And the thing about it is they pop that super gap right up here to the super resistance area. And what we do is take these headlines. You can see where they gapped it down. You can see where the lows are here. And they're right back down here at the bottom of the base. So basically, these gap ups are all headlines and how to trade them. When you are buying the options, such as, let's go, and here's what I'm going to show you. The only safe way to trade this is to go right here. This is an $11 call. That was $3.48 or $1.42. It's a January $11 call right here in this strike price area. That is one to trade. There's only 99 of those traded today, 99 contracts. But let's take a look back at where this $14 call was. This was $1.59. It's 33 cents. So let's take a look at the call chart very quickly on this $14 January call. And you can see here that these calls have never been this low. This is where they were based on the gap of the stock. So they gap the calls up and then they gap these right back down. So they're in the house of pain. What we will do is we're going to start buying 20 of these contracts at 45 cents. They're 40 by 46. There's 3,300 of them traded. Now, granted, this is the best way to go because there's still going to be a lot of volatility around this name. And so go ahead and make your bids and start buying these contracts at 45 cents. They were 33 cents on the low. So we'll go ahead and lock in the $14 call. We want a little piece of it just in case, like I said, when you get back over here to the chart, BBY, you can see the gap down, and that's why the calls gap down. They go right along with it. So go ahead and start making your purchases here now. That's one that we're going to do. There is a $12 call, which was 283, $1.56 high, 92-cent low. So what I'm going to say on this $12 call is to buy 10 of these now and put your bid out there at $1.10 and try to get locked in that trade, Mr. Plain. So let's buy some of the $12 calls. They're cheap. Let's just see. And these are January 2013 now. So let's take a look here at where these call contracts have been. They were up here at $3. This is a call chart on Best Buy. And this is the $12 call, January 2013. Yes, there's going to be a lot of volatility, but the next time they gap it on the rumor, we would sell right into it again. So let's go ahead and do our purchases now and start getting in down here at the low. We are buying the call contract wholesale, and there's a great deal of open interest. This is the best contract for the new year, just in case they're able to get a deal done. So we need to make those purchases here and now. This is the Best Buy daily chart. This is the calls that people barreled into. There's 2,400 of these traded. There are two different strike prices. They need to be purchased. That's the conclusion of Best Buy. And let us not forget that Best Buy is down 17%, 10-year low area. Whether Schultz can do the deal or not, we'll find out. And we'll be updating people moving forward on this BBY. Again, it's price volatility, it's headline volatility. You got to be buying over here when they're cheap. They were 283, so if I'm buying 10 contracts, I'm saving I'm saving about $1,500 in my purchase. Now buy those at $1.15. It's okay with me. Purchase those at $1.15 here and now.